And slowing growth in Israel is raising speculation of a rate cut there. GDP in the first quarter rose at its lowest pace since the 3 months ending June 2009. And that prompted one-year interest rate swaps to fall to the lowest level in more than 3 months, while government bonds rose. The central bank is penciling growth of 3.1% this year, a marked slowdown from almost 5% in 2011. Europe is a major factor in all this because the region accounts for more than a third of Israel's trade. Well, for more on the impact of Europe's debt crisis, we're going to cross over to the Tel Aviv Stock Exchange now, where Boaz Schwartz is Deutsche Bank's chief country manager in Israel, joins us now. Lovely to have you on the program. And so it looks as though there is going to be a considerable slowdown. I mean, 3.1% growth this year, perhaps not too bad when you compare that to other developed markets at the moment. But nevertheless, when you think about almost 5% in 2011, you're left wondering, well, what are the prospects going forward?
Thank you, Mariam. Definitely Israel is going through a soft landing, as we can see. Growth is slowing, but still we see higher than developed market growth. Unemployment is really at its low, and we see continued job creation, and definitely inflation is within the boundary. So yes, definitely Europe has a big effect on Israel, and we will continue to see a softening if Europe continues to go through major issues. But I still see Israel as a very strong place.
What do you think might be the best response to this soft landing to prevent it developing into something much more serious, perhaps even a hard landing? Does the central bank need to step in and cut rates?
I think that definitely that could be a positive development, cutting rates. I think that the policies that we've seen over the past couple of years are very sound and responsible policies, both from the Bank of Israel and from the government, keeping inflation in bay, keeping the government budget tightly controlled, not exceeding the deficit too much, although we see some signs of possible increase in the deficits, which worry me a lot. But I think keeping the economic fundamentals where they should be, I think will continue to support the soft landing.
So how much are you thinking about, you mentioned that your European debt crisis is impacting the situation in your country, especially when you think that the region accounts for more than a third of Israel's trade. What happens if Greece were to exit the euro? Are you thinking about contingency plans?
I think that Greece will not have a major effect on Israel. I think that there are obviously, the major countries, Germany, UK, France, have a big effect. And if we'll see a big slowdown in these major markets, definitely Israel will suffer. Although, Israel has large counterparts also in Asia, and I think the growth in Asia will likely to have a positive effect on the Israel economy. So because Israel is so spread out globally, and its export markets are spread across Europe, Asia, and the US, obviously. So I think that largely, if the world continues to perform well, I think Israel will come out of it quite well.
I mean, if we were to see a ripple effect from any potential exit from the euro for Greece, something that would affect the larger markets too, and it's very difficult to sort of quantify and predict what would happen in the markets and for the larger economies. But I suppose in a scenario where investors are taking risk off the table, that would affect the Israeli market, wouldn't it?
Definitely. I think that there is a couple of issues we need to consider. And if we remember that Israel moved from the developing markets to the developed markets, that had a large effect on investors' interest in Israel. And we are going through a process where new investors are learning about the Israeli economy and taking a deeper look at some of the Israeli names. Definitely the fact that the world has gone through a terrible cycle has not helped, as investors are looking inwards rather than looking for new investment opportunities.
Well, thank you very much. Good to talk to you. Boaz Schwartz, Deutsche Bank's country manager in Israel.